Good morning, everyone. How are we all doing? Oh boy. Oh, I was already in the 8 times distribution. It must be Friday. Hey Zaz, what's going on? You know, every time I see Zazu, I think of Kazoo from the Flintstones. Hey Raj, what's going on? You know, the alien that would just show up and call everybody dum dum. Morning, everybody. Happy Friday. Well, just when the longs thought it was safe to go back in the water, zippity doodah. Well, welcome to our Friday RTH Micro E Futures YouTube session. I'm JJ, and we stream twice a day on YouTube, and we're at microefutures.com. Welcome, Supra. How many sevens is that? Man, that's a lot of sevens. 1, 2, 3, 4, 5. Supra quintuple seven. How you doing? Welcome to our room. Gapping down to new lows. Yeah, well, it's kind of like one of your deals, Omni, you know? The Range Rovers have been paid for, and now it's time to pull the bids and buy it all back, right? Let's take a look and see what we did. So, welcome, folks. Our room is built on common sense, and what our mission is to try and help regular people make some money in this insane, whacked out business that we call the markets. There's a small amount of inventory here, and we sold it above here for as long as we could. We encountered sellers before 57.80, and now the market is on sale. So we're looking for that 56.40, 56.50 level to break. If that breaks, and we're only 10 points away, we'll be looking at that lower part of the cost basis, right? It's Friday. Now, remember, it's the Witches of Eastwick, right? You've got the triple, quadruple, right? Witches on tour, options expiration, contract expirations. So there's going to be some volatility. There'll be some movement. The dealers have to do their thing. What exactly they're doing, I don't want to know. All I want to know is I want to watch the tape, right? I want to watch the chart. The chart's going to tell me what's going on, right? Chart's going to tell me what's going on. I don't need to listen to anybody. I don't need to, you know, use tarot cards. The chart's telling me. Now, the chart's telling me we're looking for a buyer pre-market. Let's go see some of these levels. Still got to get used to this magic pen, epic pen, whatever the hell they call it. I was in Globex, I was talking about a look above and fail of 57.02, 57.04. And there we have it, folks. There is our look above and fail. So if you're short, you know, from 5,700, well, if you're short up here, you're great. But even a good trade is when it looks above and comes back under 5,700, you hit it and you stay short as long as you can, depending on your account size and your skill, down to this 56.64 area. But that's the first larger target. Second target is taking out that low of 1, 2, 3 days ago. Do you guys remember T plus 3? Who here is old enough to remember T plus 3? Right? So that low, and welcome to all the folks who are joining us on YouTube. Hey, Sandy. Is that the Sandy from my room? I can never tell. You guys are got different names. Hey, Telek, how's it going? Oh, hey, how you doing? Yeah, so if you are short, right? If you're short, this is our next target. Let's go see what that level is. And then 56.23 is for you big shooter shorts. That's your lower target, right? A look above and fail targets the bottom of the zone. A look below and fail targets the top. This is the concept of rotation. We teach you how to do this on a 1 minute chart so you can build up, to the larger time frames if you so desire. Of course, you can make a really nice living off a 1 minute chart. But if you want to expand your trading, then of course you can apply this very, very simple business principle, right? To whatever time frame, because the business never changes. It's the same business, just the time frame of accumulation and distribution changes. That's all it is. No big deal. Okay, so we're going to open on a gap. Let's make things interesting on a Friday, why don't we? See where the lower stops are. We took the M low. Get rid of that. Or did we take the M low? We did not. So using structural stops from previous market profile days. Now, I don't know if there's going to be buying at 56.59. The market's going to have to tell us. Hey, Nicholas, how you doing? Now we're going to drop in on that level, just gently. The other thing you can tell is look at how the market trades when it trades lower, right? I know electronic execution is everything, but it can still tell you about the intent of the order flow, right? This is something nobody really talks about. Now, if there were a lot of sellers competing, right, they would just hammer the bids, right? Hey, Lone Wolf McQuaid, what's up? Good to see you. That was a good movie. If there's a lot of competition, right? So say me and Raj and Telek and Zazu and Chuck Norris, we all have product for sale. And I see that every time I go to sell, somebody undercuts my price. What is a trader to do? Well, he's got to smash those bids, right? You got to take out every buyer before somebody else gets to them, right? But that's not happening here. So there is selling, but it's rather orderly. The fact that it stopped right at that stop, right, tells you, okay, they're selling. That means just don't go and buy it. There's a little bit of support from short covering because as soon as the shorts come in, close to that 58 3/4, the offer lifts. Now, eventually the shorts are going to get wise and try and drag the seller down underneath 59. But if the sellers see enough buyers or there are not that many sellers, they can lift price, raise price. That's why you watch this red line. And if you don't have TPO charts, not a problem, right? We've got that 1 minute chart. Whoop, sorry. Now, the short-term inventory is all above us. and it's liquidating, right? So what we're trying to do before the market opens is we're trying to find the bid. So when you see a liquidation, right, see, we liquidated and we were holding 56.87 for a while. And then as soon as we broke it here, right, all of the longs above 87, they start to puke out. See, here they're dropping out. If you look at the left-hand side, you can see the volume as it liquidates. Now what we want to do is at these lows, we want to drag this out. The purpose is to get this volume moved down, right? Get these people to puke it out. And we can just sit there and catch it, right, at a discount. Then if the buying exists, if the order flow exists, then we can just take it up and sell it for some profit, right? That's how markets work. Right? Now, if there's a lot of selling because of this options expiration, right, we will take out 56.53 because that was my balance zone. This was 2 times discount. This is 4 times discount. And this is 8 times discount. So the question, my friends, is does that fire sale all the way down underneath 56.90, 56.80, 56.90, does this bring in buyers? So far, it's not bringing in buyers, right? The shorts are the ones who are buying because they got trapped from that Fed move, right? There, we finally took that M low, right? There, we took it out. Let's see what falls out now. The J low is always an interesting spot because that's where people get short. Dalton calls that the afternoon pullback low. That low, what it does is it corrects inventory lower. It shakes out the longs above, right? It cleans up the overhanging inventory, and it also helps people get short down here, which pushes the market so you can high close it. It's beautiful, right? I love that J-Lo trade, right? Especially when the profiles are a little smaller. Here, it's a little harder. You got to manage it with candles, right? Hey, Matt. So right now, we're just kind of lazily looking for the bid, right? The market is one time framing down. We have a nice big set of what we call single prints in market profile. Now, single prints are a very simple concept, and it's explained in a very, very complicated manner. Single prints just mean a single row of these market profile letters between a distribution and a distribution. On the way down, this is inventory. This is trapped longs. So when the market comes back up to that level, right, it is going to hit some resistance, right? There's going to be inventory, supply, right? So usually what happens is if a market opens, it goes up into the single prints, people will take a short there, right? And then they'll put their stop. Now here is a bit tough because the single prints, the top's all the way up here. So you use these levels if you want to do that, right? So this happens, right? We have a big liquidation. People are always trying to find the bottom. Those ABC candles, as we call them, market profile charts, they're available on Sierra Chart, Ninja Trader. What's that other one that you guys use? I think TradingView's starting to have them, right? They're in their infancy. They're getting a bit more popular now. So I've got some other levels from an old chart. If you want to take a quick look. we've got 56.54, 56.43 half, and 56.33. These are just old levels. Let's see if they work. This 56.54, when we came back above it, it's going to be very interesting if we could break that low. If we break that low, we've got 3 days of inventory that could liquidate. Okay, just so you know. All right. We'll see. So my opinion now is the market's trying to find a bottom. Please allow it to do so, right? It's trying to give you directions. Don't interrupt, you know? Oh, let us find the bottom. There it is down here, right? Do we expect volatility? So far, the market is saying no. In 13 minutes, Shaz, I have no idea. So what do we do? Remember, we have our market awareness checklist? Remember watching the video? No? Okay. All right. So what we do is we assess the market conditions. Okay, everybody knows that it's options expiration. So they're expecting volatility, right? My thoughts on an OPEX day are assess the market conditions. Okay. Does anybody ever think about this? When you go outside, you look and see if it's raining, you take an umbrella. Anyone? Maybe? No? Little common sense, folks. Right? So how do you deal with options expiration? Right? You guys remember what common sense is? Maybe look it up in the dictionary. Right? So if the market's nice and calm, you can take trades. But because anything can happen at any time in this whacked out business, right? Always use stops, right? And I would say, how about this? As a general rule on Fed days, OPEX days, month end, quarter end, year end, news, don't mess around, right? Stick to your plan, right? Stick to your trade plan. So if you're a look below and fail trader and the market's in trend down and you're not good at shorting, sit and watch and learn, right? If the market stops and starts going sideways, the market awareness video, my friend, is in Discord. I'm actually going to do another one because it's a series of videos as the subject evolves. So what I'm trying to do is I'm trying to make traders have some common sense instead of just droning on about indicators and stuff like that, right? So if the market's choppy, if it's really choppy and the price is banging around, right? and you're a new trader and you freeze and you're one of those people who doesn't use stops and you're one of those people who always thinks they're right and then takes big losses, should you be trading? I'll wait, right? Man, crickets. Okay. Well, the answer is you shouldn't, right? Use some common sense, folks, okay? Right now we're starting to get the volume starting to build out, right? The volume's starting to build out here. Let's see if we're starting to hold. Now we know there are going to be sellers on the way up because there's trapped inventory. Why does going short require more skill? Because you have to be able to spot competitive selling and understand what that means. And most retail traders don't even know, even aren't clueless of the concept. So learning how to go long teaches you how to sell product. When you're selling product, you're going to have competition. When there's competition in selling product, that's when you're short. Bada bing, bada boom. I agree with that statement, Matt. So when the market gets to these levels, right, there's some supply, right? There's going to be supply. There's supply because they had to buy it on the way down, right? So if you are going long, my trade that I would love is a look below and fail of 53.5, right? And we might get that. But there's a lot of angry longs from the last 3 days who are looking at this and going, because people will buy ahead of the Fed, right? And in a market that still hasn't found its bottom or is in the process of looking for a bottom, it's going to take some time. It's going to take some time. So let's see. I got to go switch off the sim. Do, 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 do. Oh, wrong DOM. Okay. So remember, folks, if it's jumpy, right? If it's volatile off the open, let it open, right? It's not a race, right? You don't have to be the first one to trade. Right? We're going to open on a gap. So there is going to be overhanging supply that sells out. Okay. Now, if you don't know what overhanging supply means, it means inventory above you that is angry because they're long. If you own something at 5 and it's trading at 2, you're not going to be a happy camper, right? There you go. So remember, it's Friday. It may be volatile. There might be some weird moves, right? Govern yourselves accordingly, right? Don't swing at everything that hits you. Let's see. Oh, I really don't want to draw 16 of these. I hope we find some support soon. Right? So, oh, very cool. Thanks, Steve. Beautiful. Okay. All right, here we go. Like Jacques Cousteau, right? We're doing the deep dive. Now we're into 16 times discount. Sure, that's on the screen. You have enough screen. Okay. I'm not ready for the look below and fail yet. Market's telling me not yet. Switch accounts here and just use the micro. There. Let's put that one back on sim. That's the mini. Okay, that one's on sim. This micro one's live. Okay, here we go. Let's see what we got. Remember, just relax. Let the size traders and the professionals open the market. They'll show you where the buying and the selling is, right? No need to get all hyperactive. It's holding 53 and a half. And if you're long before the open, right? I don't like to be long too close to the open, just in case you get some weird, unpredictable order flow. But that's just me. I'm cheap, so I always tend to err on the side of caution. Right? I also want to be here at work on Monday. See, look. Yeah. See, like, once the sellers find buyers at a lower level, they're going to raise prices. Right now, they have to lower prices to compete. Right now, now you see how it's hopping around, right? Let it jump around, right? Let it jump around. There's no reason, right, to just jump in there and go nuts, right? Remember, overnight inventory is now short, right? So there should be some sort of a natural correction upwards to overnight inventory. That is the normal course of business. If there is no overnight inventory correction, right, which sometimes happens, it means that we have sellers who need to get out of product, right? So when what normally is supposed to happen doesn't, normal business, right? That means there is a change in business, right? The chart is supposed to tell you when business changes, right? So if you're long off those 54s, please sell into strength. That's a beautiful thing. Let them just come and take it off you, right? Get your orders in. I was scalp long a couple of micros off the 55s, just for a couple of points. I'm trading very, very light today because number one, I'm lazy, and number two, I just want to really get to know this contract. Right? You could see they stopped selling right here. Look, right? They stopped selling right here. So there's some bids here under 52. And we're off. If we run out of supply, we'll get over 60. We'll get over 67 looking for it. Should be a seller here. If there is no seller here, it means we cleaned them out, or it means that they saw bids and they're lifting their offer. Watch, right? Going into those single prints. The single prints above us, they're like a storage cabinet of ES contracts above you. If you want to visualize that, if that helps. So you go to the higher shelves to get the product, right? You got to pay more, right? This is a normal correction to short overnight inventory. These are the areas where you are going to encounter resistance or what we call selling. So there's no short off the open. See? As you run out of supply, you go into this red box to get those contracts. See how we stopped right where the line was? This is not coincidental. Do you see how much information a candle chart can give you just from simple little things? Most people aren't even paying attention to this. There's your edge. Your edge is you're going back in time and you're acting like a real trader. That's your edge. Now we're going to backfill. Now, if I went and drew, say I draw a volume profile here. Well, there's some position here. There's not a lot though on these lows. So could we come and test the overnight low? Why not? Right? That was a correction to overnight inventory. That correction didn't last more than 4 minutes. You see how you want to think about markets. So that order flow only lasted for 3 minutes. You had 3 minutes of buying, which they took advantage of because they lifted price up to 70. And now they're selling into it. And that, my friends, is how you move size. Right? That's how you get rid of product. I'd really like us to test the overnight low down here at 51 and a quarter. Might not get that chance. Damn. Oh well. And then we put it on sale for 2 minutes. What happened when we put it on sale, folks? We brought in buyers, right? We brought in buyers. It's just simple common sense. The sale price brought in buyers, so we raised prices. That's all there is to this business. The execution is a massive pain in the ass because it's not easy, right? And then just as soon as you start getting good at execution, the market changes, right? So that's where we have to develop our skill to be able to adapt. That's why we have to have a trade setup that helps you understand when the market's changed. See, if you have a trade setup that works, when it doesn't work, it tells you the business that allows your trade to work has changed. When you understand why that the business has changed, you're like, oh, okay, now you can clue in. You know what I mean? Every trade is a business decision, right? So when the reason for that trade doesn't exist, You're selling sunglasses and it's got the next 90 days of rain. You got to adapt. Let's see now if we get a rotation. Right? Maybe a 57 to 70 rotation back and forth. Oh, that'd be fun. We could play some ping pong, right? Uh, Let's see if we can hold a rotation in this thing, right? Let's see if we do a look below and fail of this. Now, where this can get into trouble is if it stays under 57 and 3/4. That's why you want to only buy it if it looks below and comes back up. Right now, don't touch it. Does that make sense? See? You got to wait until it reclaims the level and another candle opens above that level. Then you have a fair shot that the seller is gone, right? Now, of course, they can come back, but that's why you have a stop. See, it's still not clear. So I'll wait until this candle closes to see if we get back above this level here. Ah, damn it. Oh, I got one at 61 and a quarter. I'm offered at 63. Not the greatest trade. I screwed that up. If it breaks the 58s, I'm gone. That was not a good trade. That's one micro. I'm offered at 63. I'm long at 61 and a quarter. I'm out at 62 and 3/4 because I moved my offer down. That was a pretty sloppy trade execution. But that's the look below and fail. So we went under 57, tagged 53, came back up. So now it should rotate at least up to 65. And if it doesn't mean it means the sellers just stepped in. So in RTH, the bid and ask moves quickly. It's supposed to. You know, are you familiar with like baseball at all? I know you're in India, right? So let's use cricket, right? So those professional cricket dudes, when they throw the ball, what do they call them? I'm Sri Lankan. I should know this. Um, what's the dude who throws the ball in cricket? Like a pitcher. Anyway, if you're a new player, are you going to be able to go to a professional match, right? And I don't know either. And hit that ball, bowler. There you go, right? No, you're not. Like, are you going to be able to stand in front of like a major league baseball pitcher? And if he throws one right down the middle, you think you're going to catch that? You're not. So this is what you do. You practice your trading in Globex. Gauche. You practice your trading in Globex. It's a slower market. This is what we call the show, right? This is the show. This is when, like, as baseball players would call it, this is the major leagues, right? And off the open is very hard to trade because it's, especially on an options expiry, right? It's tough, right? So, you know, yeah, you keep saying I'm 2 minutes behind with my data. Is anybody else finding that? Okay, okay. No, I know there's a delay on YouTube. POC moved down to 55, 56, 59 now. There it is, right? That little purple. So now that's good. This is good accumulation. Let's see if that holds. Let's see if this holds. Yeah, this is, don't worry if you can't trade this. It's tough. You know, I when I first started trading futures, I would never trade the open. My rule is when I first started trading, I wouldn't trade for the first hour because back then I didn't know how to use candles. I didn't have the candle chart next to me, which really greatly cuts through a lot of the fog. And TPO charts are great, but when the ranges get bigger and you trade TPO only, oh my God, it's tough. It's very hard, right? So sellers are at 70. They stop selling at 57, right? Just take your time. Trading is a journey, my friends. You know, yeah, I have a friend of mine and she just goes, "You know what? Don't tell me all this stuff. Just give me one trade that's going to solve all my problems." Right? I just want to take one trade and then I want to be done. I want to retire, right? I can't do that because I'm not a genie. Hey, Travis, what's going on? Yeah, I'm at 70, 70 half, 70 quarter, 69, 69 quarter. Oh, listen, take your time. And this is why, you know, a lot of people say don't trade on the sim. I'm like, yeah, use the sim so you can become proficient in the software. You have to be able to use the order entry quickly, right? You should have a method of using the order entry, right? Moran, don't worry, Moran, it's Friday, just relax. It's okay. You might be on another. Are you on the same contract as us? Are you on the M contract? Did you roll over? So now, if we stay above 70, say we had just started trading today, right? And I went, okay, well, you know what? That's my balance, right? So you take that and you just double it. Because now once you have the position, you take the position and you go to market, right? It's like that thing, this little piggy went to market, right? That's what we're doing right now, right? Very simple. That's how they get you, Ghosh. That's how they get you. They make you put it all on black, put it all on red, right? Guys, I don't know what you're talking about. We already made the high and we're back down to 68. Just look at my clock jam, okay? There's a delay on YouTube, you guys. Relax about the delay. Focus on your screens, right? Don't worry about it. Yeah, now you go. You're back at 68, right? Now you guys are so messed up on a Friday. Now you're messing with my head. I'm like, is there something wrong? There's nothing wrong with my charts, knucklehead. Get some sleep, Jam. You're overworked, brother. It's a confusing week. Rollover, Fed, the Witches of Eastwick, right? I would say it's ice cream time. If I was allowed to have ice cream, I could go for some ice cream. Oh yeah. Yeah, I've never played cricket, but I was born in a country that apparently is famous for it. Um, but what do I know? I was a very, very slow offensive tackle. Okay. You're the only like 20-year-old I know who talks about kitchen gadgets. I know you're a power lifter. You take food seriously. Take your time with this, folks, right? You can see, remember we said that there was a seller here? Guess what? They're still there, right? Because if you had size to sell, wouldn't you sell here? If you were selling before, wouldn't you sell there again? Right? Unless you saw buyers that allowed you to lift price, right? It's just commerce. What's going on, Omni? It's Friday night, you got to go out. Get into some trouble for me. Is it bad when the market lick down, go long, getting stopped out in the end? Hold the trade until it comes back to where I started long and make the senses back. No, that's like playing Russian roulette, Michael. Would you be able to talk about quarterly markup and how size inventory thinks when the quarter was down versus up? If the Here's the thing about size, okay? They get paid to be a steward of your money. Sometimes they are going to have to book a down quarter, right? It's better to book a down quarter than do something stupid and have a loss be bigger, right? Size traders play the long game, right? They're long term greedy. We are trying to make money every day, right? Thanks, Funk. Good to see you, brother. You know, we think in times of hours, they think in times of decades, right? Hey, JR, what's up? Oh, now you guys are talking about. I look back into the trading room in Discord and they're talking about ice cream. Now I'm going to get into trouble. So quarterly markup is nice, but I don't know how to pronounce your name. ASC triple E. Um, and thanks for being with us. Quarterly markup is great, right? If you have the order flow to do it. Sometimes the order flow is not there. And sometimes you just got to take your lumps. Now, where's our guy? We've got a guy in our room who, his firm manages around 4 billion. And I think he would agree. Sometimes you just got to take the hit. Because once you start doing crazy things to mark up the quarter, especially if it doesn't go well, it can get ugly, right? Hope that helps. Now, I've never worked at a money management firm. I've been a distributor of stock my whole life. But from what I know about how people with large amounts of money, see, they have that word, they have a fiduciary responsibility to their clients, to be stewards of their money. You were selling pre-IPOs? That's cool. In New York? Long Island, really? Oh, I miss Long Island. Around where? God, if you say Port Jeff, I'll I'll start laughing. Most of the companies ever went, well, Melville? Okay. God, you and I probably know the same people. I used to do a lot of business with Long Island. My old partner was in Long Island. Those were the days. Oh, you got to wait for the setup, Michael. And it's a discipline thing. What you got to do is flip the switch. You want to, a lot of retail traders feel they have to chase the market, right? What you want to do as a retail trader is you want to do business on your terms. Thank you for reminding me about VWAP. I've hid the study. Where is it? Oh, it's up here at 79. Let's see if we can crack this seller at 76. Or sorry, 73. We got to get past the goalie at 73. Right? You really want to, Michael, reframe it that you want to do business on your terms. This is my setup. My setup is the look below and fail. Why do I take it when the market looks below a level and the seller stops selling under that level? The market rotates up. I buy a little bit and I sell into the strength created by lack of supply, right? But if that trade doesn't work, so say I'm long at 70 and I didn't sell 74, right? And it takes out 72, right? Say if I'm long 72, if it takes out 72, my risk should be at the bottom of that candle, right there, right? Because once the business reason for the trade goes away, why do you have capital at risk, right? We have liquidation from above pill, so we're gonna box it and see what comes in. That's what a market does when it opens, when there's liquidation, right? Yeah. Hey, Howard. The POC is 67 and a quarter, right? It's right here, right? So we're just going to box the market. That's a market making term where you're both sides, right? And you buy in underneath the middle of the box, you're a buyer. And then when you flip to the offer, when you go over the middle. So now they're going to buy. They're going to buy from 64 down to 57, 56, right? Once the sellers are complete, the market will rotate up and they'll flip to the offer. Yes, that's why we have a trade setup. Come visit us in the room, right? Join us for 7 days, right? It's a 7-day free trial. Give it a shot, right? It's not going to cost you anything, right? And I promise you, you'll learn more in 7 days. You'll learn how to do business on your terms. You'll learn how to manage your risk. You'll learn how to think like someone who does this for a living, right? See, now, as the market's offering higher, right? So anything that they bought, if I was a buyer at 64, 3, 2, 1, right now I'm a seller at 65, 66, 67, 68. This is how market makers make money. They're both sides of this box, right? And if enough buyers come in, we can lift the offer, right? Lifting the offer means recognizing that there are buyers. And when those buyers come in, we can raise prices. That's all, right? But trading is the tough part. Talking about it is easy, right? But taking that trade, putting your stop there, and then when it takes your stop, not to have a big hissy fit about it is hard. Why? Because you don't understand the business, right? Once you understand the business, that Russian roulette will stop. Good grief, what are they doing outside my window? Lord in heaven, going crazy with a sledgehammer and a jackhammer. Crazy. No fiddle today. Yeah, let's see what happens, right? I'm not going to make any predictions. Market's been open for 26 minutes, right? It's Friday. And I'll take very specific trades. And I myself trade less on Friday because I like to take it easy, right? Friday is the day that you keep all the money you made that week. So, uh, so what we do, Michael, is we use the stop to tell us about the business, right? So, right, say here I went long and I got stopped out, right? Well, these candles are pretty big for minute candles. So would I catch the short? Probably not. Let's be real, right? But sometimes, you know, you'll take the long, you'll get stopped out, and then you see it here. And then when it comes back and it holds the level, you can take the trade again because you have a little bit more market intelligence, right? We use the information that we get when we get stopped out, right? Now, sometimes you just get stopped out because a stray order comes in and hits the market down. You can't do anything about that. But a lot of the times, like for myself, I'll trade too early and I'll get stopped out. And I'll be like, oh, okay, I'm early, right? Uh, Michael, it's so simple. It's really simple. It is the simplest thing, right? Yes, but you have to learn how to do it, and it takes discipline. So we will show you how to do it. You've just got to stick to doing it, like Jordan throwing 1,000 free throws, right? You just got to work through it. Work through the steps. It's based on the simplest business principle. That principle is since cavemen were selling rocks, when you run out of rocks, you can charge more. Simple, right? Constant seller at 74. Why? Because they're front running VWAP, right? Why? Because there's supply. Now we're running out of supply. We're going up into the closet to get it. So Howard, now the POC's at 69, right? And as we go into these single prints, see now there's that seller at 76. And they're still front running VWAP. But we've brought some buyers in because this area here has shown price stability, and people like to see price stability. That's why they line up and bid. If we stay over 71, we'll rotate up to 74, 75. If we get under 71, you're probably looking at around 67, 68. These are like first targets. And we're still in A period, which means the first half hour. So this whole market profile thing for people who've never seen it before, where you see the letter W and A and B, all it is a half hour candle chart where the guys from Chicago gave every half hour candle a name. So from 9:30 a.m. to 10 a.m. Eastern time, that's A period. B period is from 10 to 10:30 and so on. Right? It's an old Chicago floor thing that got adapted to market profile. That's why we say, oh, A period and now B period is opened. That's why I have a countdown timer, right, that shows how much time is left in the half hour candle and then how much time is left in the 1 minute candle. Why I have that is so I can manage, so I can keep it clear in my head. My tendency is to trade too early. That's always been my thing, to be first, right? Because your clients, you have to be first when you're selling, right? First guy to sell takes all the clients, right? You don't want to be stuck with inventory. So I had to sell. So sometimes when I'm trading retail, right, I'll get a little too frisky and I'll sell too early or I'll buy too early. That's like, oh crap, right? And that's how I came up with this, how to do this look below and fail, because my whole thing was take the trade, get stopped out. 3 minutes later, the frickin' thing works. I'm like, oh, right? I mean, how many times does that happen to you guys? You take the trade, you get stopped out, frickin' 3 minutes later, the trade works like a charm, right? It happens to us all the time. It's because we're on the wrong side of the trade, right? Do you keep post and pre TPO separate? The software automatically does it for you, Kevin. Right? It's like without fail, right? It still happens, right? Oh, there's the overnight point of control at 62. Sorry, I should have had that marked. It was all the way up here. It moved down. So that's the cost basis of the overnight, 70% of it. So we've been selling it up here, right? The waiting is the hard part because at first we don't know what we're waiting for, right? They tell people to be patient and they tell people to wait, but they don't tell them why, right? You ever notice that? They go, oh, you got to be patient. You got to be patient. Why? Right? And they never tell you why. They just go to the next subject. Well, you got to be patient, right? And people hate being told to be patient. They hate it. It's like when your girlfriend's angry and you tell her to calm down. That is the worst thing to say, right? That's like lighting a stick of dynamite with a laser, right? Why, Christian? We have to wait for the order to complete itself. Now we know why you're single, Humpty. Yeah, that's going to work. It'll go over like a lead balloon. Ugh. Right? We're waiting for the market to show us that the order flow in the direction that the bus has arrived for us to get on it, right? Like right here, this is where you be patient because there's no specific trade. What you want is you want the market to do this. But here, no way. You're not screwing me out of my money. Get away from me, right? You're learning, Zazu. You just got married a little while ago. You're learning, right? Just stay silent and nod, right? Yeah, we just trade outside in at the moment. Yeah, I don't mess around in here, right? I'll let everybody else. You guys go play or go ahead. Go have fun, right? I'll wait for this or I'll wait for that because I know that's the edge of my sandbox. That way, also your brain relaxes. So you're not trying to anticipate that. You're not trying to, um, jump ahead, right? And and that calms your brain down, so you can actually see things objectively. Because as soon as you get into a trade, you're like blinded by the fact that you're long or you're short and it's not working, right? This cuts down on the number of trades you take, right? So this rotation that we have here is now kind of getting smaller. Why is that? Because there are less people coming into the store. That's all it is, right? So we opened, had that big rush. Now it's kind of slowing down, right? That's all. Hopefully, we rally 150 points at 2 p.m. Well, hey, listen, if you're tuned into the psychic hotline, you know, that's a beautiful thing. I have no idea. You have a feeling? Okay. We will. Hey, listen, there was a guy when Elsie will tell you, there was a guy called Squirrel. When we first started the trading room, he would show up. He'd pop into the room like once every couple of months and he'd go, June 29th, 4 p.m., there will be a time quake. And he'd just disappear. And I'm like, what the hell is this guy doing? Time quake. And at that time, on that day, the market would do something weird. It would either have a wild price swing or something like that. But he never knew what was going to happen. He'd just say time quake. And he'd get it. He'd always get it. It was like, ooh, this guy's kind of spooky. We never knew who he was. Meet all kinds. It's an inside day. Well, it's not an inside day because we open on a gap. So we have everybody above us, right, who's trapped long, unhappy, right? And they're puking out their volume. So on this chart, I've got 56.69. On this one, we are right in the middle of our balance zone, right? We still haven't accepted underneath the overnight low, but we're quite far away from yesterday's low on that gap down. And we're just right in this area of 3 days ago. Right? On July 4th, the market will be closed. There you go, Rudy. Right? So let's see what happens. Right? I'll just trade my setup and today I'll scalp, right? Do you get sense that the market likes to balance a lot? I I love trading balance, right? I love trading rotations because it makes sense to me, right? A lot of good trades do happen in Globex. Now, a lot of old traders don't like Globex. They get really angry when you mention Globex, right? Like they'll start ranting, don't trade Globex, don't trade Globex, right? We do okay in Globex, but we have a method of trading that, as we say, well, I don't know why they don't like it. I don't want to crawl inside their brains. But if you're trading a couple of micros and you're learning how to trade it slower, right? You can also go and you can make a decent living in Globex, but you have to manage your business, right? And if you don't have a method for trading, see, we just use the look below and fail and the look above and fail. And we keep our business very simple, right? So, like right now, if it looks below 56, 57 and fails, right? Now I'd wait for the next candle. And if the next candle holds 58, 58 and a half, right? It could be a look below and fail. If it can't, and you're a short seller, right? Depending on how choppy it is, if you sell the 56s, right? If you sell the 56s and your seller still is agreeable at 57, 58, short 56 on 2, 54 cover on 1. No, I'm moving it down, 53 and a quarter. Cover the last one at 53 and a half, flat. So I saw that there was a seller engaging. So I hit the 56s. When it dropped down here, put in your bids and cover. Now, Globex has enough liquidity for us. Okay? We're not trading 500 E-minis, 1,000 E-minis, right? Like they say, let me borrow a term from Long Island. We're pikers, right? We're not trading size. What do we care about liquidity, right? When you hear retail traders talk about liquidity, it's comical, right? It's comical to hear retail traders talk about liquidity. What are you trading, like 1,000 E-mini contracts? No, you're trading 3, right? You're trading 3 contracts, right? What do you care about liquidity? Trust me, you're not going to move the market on 3 micros. Okay, like get real, right? So it's fine. It's a great time to learn. It's a great time to make a little money, right? It's convenient for people who live in other countries, right? Right? We're going to see sellers here, right? At 60. So if you're long, right? There's the seller, right? We just poked above it. Now, if those sellers see buyers, they're going to lift that offer all the way up to 62. Yeah, but that's all. You know, it's easier for some larger trader to come in and sweep the book. But what do you care, right? You buy 57, 58, you sell 61, you make 3 points on 3 to 5 contracts, and then you go for breakfast, right? Don't worry about all that sweeping the book and vacuuming the carpets, right? Don't worry about all that. That's all that Twitter fantasy talk. Do you not understand what I'm saying? Right? There's all this stuff. Oh, market makers are hunting your stops, and somebody's going to come and sweep the book, and somebody else is going to vacuum the curtains, and all of this stuff. Just ignore all that stuff and trade, right? What gives you the confidence? The stop. And the offer is lifting. Now, of course, you can get stopped out. Say you bought 58 against 56, right? And you put your stop at 56 or 56 half, and the market takes you out. Well, you got stopped out. That's business, right? No tears, right? Don't worry about all this fancy mumbo jumbo you hear about sweeping books and liquidity and all of that stuff, right? They're just throwing words out to make them sound really, really sophisticated, right? Just focus on your trade setup, focus on how to make money, focus on how not to lose money, right? Wait for the next look below and fail. Exactly, right? And I'm not jumping to the next trade. You take a trade, then you have a coffee, right? If I get stopped out 2, 3 times in a row, I stop trading, right? Go outside, get some air, come back in. Sometimes you got to pull your way over. When traders on desks get into a bad situation, they take that trade away from that person and put it into fresh hands, right? If I get stopped out 2 trades in a row, I don't care about the time frame. I'll take a break. It's a 23-hour day. There's lots of time to trade. There's lots of opportunities, right? You're not missing out on anything, right? You wait for that trade, right? I don't time my trades, Michael. I take my trades based on setup. When the opportunity presents itself and I get to do business on my own terms, right? Then I take the trade. So sometimes I will get stopped out 3 times in a row without a winner, and I'll just take a break. Right? Yeah, and if you're in trades too long, it means you're not understanding the business. Right? It's not going to affect you that much, right? You're trading 4 to 5 contracts and you're flipping them out, right? It's negligible, right? It'll- this whole trading thing, listen, man, I've done things on a trade desk that would turn you guys blue and make you throw up into the garbage can next to you, right? This retail trading thing, all you got to do is focus on your business, right? Yeah. So if the setups don't work, just get up and get away from it, Michael. Yeah, go for a walk, do something else, clear out your mind, right? Don't be a slave to this. Especially now, this. You see this? See how the candles, they're like, right? You're getting that chop in a really tight range. Just leave that the hell alone, right? Don't get involved in that. That's when they chop you up, right? Right? If you make a little bit of money, get up and walk away. A lot of people say push your edge. When you're learning how to trade, you don't have an edge. You're developing it, right? It's better that you develop the skill of keeping your money than your edge at first, right? That's how people blow themselves up by pushing a good day, right? If you make 500 bucks and you lose 50, give your head a shake, right? You got to be disciplined, right? We're grown people, right? We're grown. We're not little kids, right? You don't get a participation medal for losing money, right? Be very, very disciplined in your approach to business. Yeah, we got chop now. You know what chop means, TJ? Coffee time, right? This is a time for wholesale to do business, right? This is not for us, right? We do business when it does the look below and fail, the look above and fail of our balance zone. This keeps you out of trouble. This keeps you from, needlessly trading. Here, this was it, right? So when it came down here, I shorted down to here. I missed this trade. This was the look below and fail. I should have been long here, stop here, sell a little here, maybe a little here, but just generally sell into that move. That's it. You've got to trade what the market gives you. If the range is 6 points, you can't expect a 30-point trade, right? So when it's doing this, you got no business being in there. Right? And just say you are long, right? Say you just didn't listen and you went and traded and you're long. Well, then just use some common sense, right? You know there's going to be a seller here at 68, 67 and a half. So if you're long 62, sell into it. And you know for sure there's going to be a seller at 72, right? They're going to front run VWAP like crazy on a day like this because all the inventory is above you, right? The supply is above you. That's why it's not ripping, right? But it's still got some good longs and a couple of quick shorts. And then it'll chop around. When it chops around, step back, right? When it chops around, step back, have a coffee. And if they do, like Teen's saying, be careful because it could rip, right? Now, what is the goal of the market? The goal of the market, right? What is the goal of any market? To take inventory, to take this and go sell it up here for profit. What do you mean? Do you have any other phrases like that's what they call commerce in Salt Lake City? Yes, zero cost paper always finds the bid. And I never saw a bid I didn't like. I anchor VWAP once, NCOM. I use session VWAP. I anchor it from the Globex Open at 6 p.m. Eastern Time, which is 10 p.m. UK time. And I just leave it. Now I know there's all sorts of places to anchor VWAP. I just use session VWAP because that's all I've used my whole life. Right? So if we run out of supply, we'll get above 76. I wonder how things are in Salt Lake City. Used to do a lot of business out of there. Right now, as Teen says, the late to the party shorts, once they realize that they're short and supply is gone, you could get a little rip up to the 58, 83s, 84s. Let's see. Right? The more people who short this thing under VWAP, right? The more people who short it under VWAP, when the supply gets cleaned up, they're going to be in trouble. VWAP bands are great. The standard deviations, or as I like to call them, the deviants, are great places to take profit. Exactly, Michael. Exactly. It's just based on the oldest principle in business. Right? You guys remember the COVID toilet paper shortage, right? Now I redid these balance zones for the folks, who just came in. Now, I mean, the balance zones that I drew are still working nicely because that look below and fail of 56, 53, you actually just rotated all the way up to the middle of the zone. You had to hold it for a while, but it worked. Long 62, I'd move that stop up to 66, Matt. I mean, S Bill. If it falls apart, at least you get paid, right? That's a nice trade. And remember, make sure you offer them out, brother. Right? I don't know if the poor high is going to hold. Right now, it's holding. Right? There's a seller at VWAP. That's predictable. Right? But let's see what happens. Right? If you are long on a day when the inventory is above you, right, you should be selling as the market goes higher, unless you have a very big account and you can withstand the move back down. So say you're long 62, that's beautiful trade location, right? I'd be selling a little at 67, 68, 70, 71, 72, right? Right? Put your offers out. There's no point owning something if you don't put your sell orders in. You're not an investor, right? As the Penguin would say, you are not Warren Buffett, right? Take that inventory and turn it into cash, then put it into the next trade idea. Right? So we're holding 70 and a half. Let's see if we can creep up over VWAP. Come on, give it the old college try. Oh, there we go. A little bit of inventory at 76. Let's go chew through it now. Right? Once we have the position in hand under 70, we will go and retail it out over VWAP between 75 and 87. It is exactly like a store, right? Think of this as Crazy Christian's House of ES, right? There you go, right? There's still sellers at VWAP, but we poked our head above it, repaired that poor high. That's good. So, hang on. What about on longer time frames? Are you still so strict on having take profit from the get-go? Oh, hell yes. And I think, sir, you answered the question in take profit. If you're not going to take profit, I'll be happy to. Some traders give their stop losses a lot more room because they have crappy trade location and they're not understanding the business reason for their trade. The reason you're having a difficulty with your setup is you're not understanding the business reason for your trade. It should be very simple. Come into our room and check it out. We'll teach you how to do that. A lot of people, including myself, say you should know where your stop is before you get into a trade. Don't walk into a room unless you know where the exits are, right? That's Chuck Norris 101. You can do whatever you want, Chuck Norris, right? You can have it in your mind. Whatever you want to do. I like to have my orders in the book. So when the market goes, I get paid, right? I come from the place where it's not going to be the last trade I ever take, right? I'm a trader, right? I take inventory, I turn it into cash, right? I take whatever I can get for it because that's business. But you can do whatever the heck you want to do, right? And I don't say that's wrong, right? But what I do is I teach people how to be consistent on a small time frame. And then as you know, if you're trading 200-300 grand and you want to hold it for 8 hours and you can add to it, you can trim your position, you don't freeze, you're good at all that. Great. That's beautiful. Right? Anywho, we're done for today. And I really appreciate everyone joining us. Have a wonderful, wonderful weekend, everybody. Come visit us at Microefutures. We got that 7-day free trial. Take advantage. And anyone who's interested in one-on-one mentorship, reach out. I'll be happy to do a phone call with you and assess your needs. Have a wonderful weekend. I'm JJ. Stay safe, folks. Enjoy the sun. Bye for now.